Hello and welcome to the show. Thanks for joining me for a quick update. What does the... It's just a black background. We can't have that. Regulators find themselves in uncomfortable territory as concerns over regional banks resurface again. They're allowing the US largest banks to grow even larger, invoking systematic risk inceptions and proposing blanket deposit guarantees. However, if left unchecked, the situation could spiral out of control, overshadowing traditional crisis stamping policies. Regional lender PacWest is feeling the pressure this morning. Pre-market drop of over 3% continues its downward trajectory. Meanwhile, controversial topic of short selling bank stocks is heating up discussions again. This is a familiar conversation to anyone that was around in 2008. Investors borrow shares, anticipating a price drop, profit by buying them back later. In 2008, the SEC briefly banned short sales in financial stocks to stabilize the market, but a lot of people would argue that it was completely unnecessary. Looking back on that policy, we might say that it failed, and regulatory intervention on this occasion then may not be as likely, certainly more contentious. Some argue for a ban, given the uncertain economic outlook that we see across the economy, including in factors like US debt ceiling, failing commercial real estate values, persistent stress on the US banks. All of this together could trigger a further deeper recession, with stock plunges spooking depositors and prompting bank runs. Officials are investigating potential market manipulation, and JP Morgan CEO Jamie Dimon suggests considering a ban on short selling bank stocks, particularly his bank. However, leaving things as they are is also a possibility. Critics of 2008 short selling ban argue that it was completely unnecessary and did nothing and only harmed market quality and stability. Obviously, it would highlight the liquidity and pricing efficiency as being important to market stability in the first instance. Short sellers can find alternative instruments anyway, like futures, options, and swaps, to bypass the ban, especially institutions. Moreover, some argue that short selling contributes to market balance by scrutinizing those deserving companies. And if this is true anywhere, perhaps it's true in the financial markets. I would ask you, if you're watching live, let me know if you're in the comments after the same question. Goldman and Sachs economists are suggesting a drastic moves like this would be unlikely in this particular scenario, and I wouldn't go out of my way to disagree with them. Short sellers can use these alternative instruments, futures, options, swaps, to circumvent these bans. In futures, short sellers enter into futures contracts agreements to buy or sell at a predetermined price on a future date, and they take a short position in the bank stock futures. Then that'll effectively replicate the profit potential of short selling the underlying. If bank stocks decline in value as anticipated, short sellers would profit from price difference there, closing out those trades the same way you would if you were effectively shorting the stock. Options, same deal. Shorters employ option contracts, give them the right but not obligation to buy or sell an asset at a specified time and frame within a certain time frame. By participating in these contracts, which gives the holder the right to sell an asset at a predetermined price, short sellers profit from declining bank stocks, same way you would sell an underlying. Swaps, banks often engage in swap agreements. These are customized contracts, not a million miles away from those other two instruments we talked about. They're exchanged between two parties. Cash flows are based on price movements of an underlying asset, and if you drop below certain tolerance, you swap. And that can also lead to profiting from decline in the share price, which would only then be something that people who could use these instruments would have an effect on that share price and for their other machinations. So a lot of people would say that it's not actually anything like a free market scenario. These alternative instruments provide avenues for short sellers to achieve similar outcomes to short selling bank stocks directly. even if a ban is imposed. So it's completely pointless and it'll do nothing but make it so that you can't take advantage of these problems to your own benefit. However, it is important to note that availability and accessibility of all these different instruments vary depending on your specific circumstances, your geographic location, the regulatory environment there, and of course market conditions at all times. Do you want to hear about those market conditions? Right, that's it. There it is. Oh, damn it. That freaking thing's gone again. Yo, come back. Go away then, if you're not going to come back. Right, so this is the chart. This is SPY. Pre-market 412.30 has been higher in the pre-market pricing. We can also go across and look at the NDX futures here. 0.37 off Friday's. I mean, they're doing all right in pre-market. If you look at that, it's a continuation from Friday, as obviously the chart's doing such times as the market's open, but strong move still, though. In pre-market, you'd have to say a little bit of lackluster at the moment. Then what have I got open here? Actually, SPY, and that's on 4 hour. What's this then? Daily SPY. We'll just go here. Spixy. SPX 4124. So far, so good. If we open in range, we push back 4125 higher. Looking like you can see the next target above would be 4127. Break that 4132. And that would be topside moves on SPY SPX fall in a similar direction. This positive forward pricing here on the futures, the Contango, suggests that there could be a little bit of a push up, but Friday, if we go to the full day, 4 hour time frame, sure, there was a little bit of a recovery, but in context, that was less than 50% of the preceding candle. That took you below a 50 simple period moving average. That's dodgy. If you got the daily time frame, overall negative day, closed below open with a large wick. Is that a rejection from potential support? Weekly time frame would suggest that 50 simple back down around 396. That could be the big large correction before a move further to break in significant highs in around 430 and SPY and so on, trying to target 450. It may well be that there is a steep correction in the 50 simple coming in around 396 on the weekly. Might be where you find that on the daily time frame, 200 period moving average in around those levels as well. So if price action is to make a dramatic move down and a huge volatile gap to show up, or alternatively to happen during market hours, then I would expect that 200 period moving average, both cases, to provide support on the daily and the 50 simple on the weekly. 4 hour time frame, you've got 400, that's also support level. Below that 50 simple, that 200 period average moving average does become very obvious to most traders. The fact that it's entering a gap now gives you confluence. If price action is to break below these previous lows, that would speak to a correction on the momentum. Typically, you would get that in at around the center line, so you wouldn't expect to see lots of 4 hour open and close candles this week if price action is going to close down. Bit of consolidation going nowhere, fine. Moving to the top side, probably positive for price action in the short to medium term, as in the first half of this week. And if you see price action on 4 hour time frame consecutively opening lower and closing lower, especially if you get a number of them below 406, 407, you will push in, test the low side of that formation at 404 and go down to 400. Those are the levels to look to on SPY. Yo. Boom. Get this chat box up. Hello, everybody. Pop the chat out. Poppity pop pop. Get that guy over there. Back to the charts. Thanks for being here. Hit the like button if you're getting any value from the show, and if you appreciate these live updates ahead of the opening range on price action. If we're also to go across and look to the select sectors, maybe that you find that industry or stock that you're going to be trading today. You can see that VIX in the pre-market is up at 17.61. That's 3.41%. We can see that, yay, materials got the highest move, strongest move pre-market at 0.61% to the top side. Energy also pushing up. Not so bad on technology so far. Real estate, that looks dangerous but positive. And then consumer discretionary. Not such a good day on Friday, but obviously pre-market across the select sectors, things looking okay. I'd say that's also very dangerous. Yo. Someone on Instagram recommended me and spoke very highly of you. Thank you very much. Love you, Shasha. Appreciate it. Good to see you. If you want to see anything in particular, let me know. So looking at VIX there and seeing there's a little bit of volatility pre-market, yes, stocks haven't yet done a lot pre-market to justify that anxiety that I'm getting from looking at VIX, especially when futures themselves are pushing. So that's a strong move. We'll see what happens there. Obviously, that's a VIX. Let's go to something where you can see the like in here. There's actually information. Informazione, yes. So there's your gap. Volatility cross. We'll get on the hourly. 200 period 50 simple. Maybe it is then time for a pause on VIX. Time for a pause on VIX and SPY. Yo, chat box. Nick G, stop clicking the wrong button, spotter. See, Tradespotting does all the bad stuff. Jamie, he does all the great stuff. Tradespotting, good day and good morning to you. Good morning. Good morning. Tradespotting is the best ever brother. True story. Rocky's probably better. Well, I mean, I know he is. Tradespotting, is the chicken going to cross the road and make a proper head and shoulders fling to the upside today? TSM. Check out Tyson, you betcha. Thanks, host. Thanks, that lady Kim. I'm brand new. I want to be able to quit my job one day and do this. Good aspiration, mate. What do you do for your job at the minute? What industry is it in? And if it got a ticker, we'll happy to look at that company too. And anything you're interested in, what stage of the process are you at? I would definitely recommend, if you're like brand new to this and want to do it for a job, then a free playlist on a channel called Rocky Outcrop. He's my brother, and like people were just saying, they're maybe even more preeminent than myself. He has a free playlist called, I guess, like trade and education playlist on his channel, Rocky Outcrop, and ROCKYOUCTROP. Rocky Outcrop. You get that, and that's definitely the best recommendation. And from that, you'll find every other avenue that'll get you to that. Doing this for a job, so that you don't have to stick your head into the cheese sandwich factory, only just to pay hello to your old mates that were on the line, still on the line, so they are. So I mean, what was I looking for just briefly before I go to Tyson? I mean, I'm not going to do it all here. The 50 simple 1770. Yeah, we thought this might push to 1777. If it is, the VIX is coming down, SPY is coming down some more. 1777. We've already got that test. So if you do put in a higher low, then it's back to the next target, was 1888, right? So we'll probably call it 1850, 1830, 1850, 1888. That's the next target. You've got a gap on VIX that closes in at around 20, and we expect it probably push towards 21. If it is coming back and testing the basis line in that channel, then I'll have to get my drawings. Hello, drawings. And that's up at around, yeah, that would be another test of 20 and whatnot. So close that gap, push the 200 period moving average in the 4 hour, and test in at around 20 on VIX, if it is that SPY is coming down. But pre-market, things are going okay. It's just that structurally it's not too fantastic unless it does better, and it could be in the start of rolling over. So it has to start pushing to the top side, and the sooner the better. Hey, Lady Kim, 23 months. Nice to see you this morning, Jamie. Thanks for being you. You're welcome, Kim. Thanks for being you. I do stagehand, breaking down and building up stages for concerts and big shows. Decent money, but I know I can earn money doing this if I learn. Good shit, man. Do you get to travel around doing that then? And like, do you get to see lots of different bands, or just a one band you're doing it with? That could be pretty cool if it's a good band too. It's a good job. You know a few people that do stuff like that. It's a good job. Hard work at times though. Good to see it, yes. So it's also the sort of thing that gives you time to do this sort of thing alongside it. What was that blibble blimp? What did the blibble blimp mean? I definitely got a blibble blimp. What was it? Frank. You betcha, Frank. Hey, Jamie, could you take a look at FLJ, thanks? You betcha I can take a look at FLJ. FLJ, this is a donation, so I'm going straight to it. It was FLJ, right? Yeah. Oof. It's a nice test of the 200s. It's on regular. It's on regular. 4 hour regular. Weekly. Get the trend. Right, so this has been tough trend to the bottom there. A lot of continuation divergence on this move to the top side. You had your V-shaped recovery. You went back up and tested highs within the formation. You didn't manage to break the overall structure on the weekly time frame. But you did, I suppose, disturb that downward sloping resistance. You see that price action was using that diagonal as resistance until such times as it broke through it and resistance became support. So despite being diagonal, that's relevant. If we also put this onto our magic ruler, we can see that these various levels, which are important now, include 236, which is approximate to the 50 simple period moving average on the weekly, where you find price action right now. If you're to break up, then you've got the 382, which is also confluent with the prior highs within the formation, so you definitely think that's a likely resistance level. 50% retracement, I'm not going to turn that down. Top side of the golden pocket seems more relevant there. You've obviously got a test of the 786, and then 886 will be that when defeated. Now I'll go down to the daily time frame, see where I've got support and resistance, mark this out slightly better. That was a really good Rocky Outcrop flash. If you want to get, the absolute best way to get better at trading is to, if you're brand new, we drop that playlist in there for your new guy in chat to be, to show like you don't have to pay to do it. But like the truth is, this is a very lucrative profession, so you would expect to invest in yourself to get beyond. Some of the ways you do that can be with money, and I would recommend the best ways to do that are those, again, via that same person. Rocky Outcrop can go via his Discord, which gives you access to this indicator, Rocky Outcrop Flash, which helps you make better decisions at times when you're learning. You might otherwise be throwing it all away. So it's definitely a good, and then once you've got it, you'll know the best way to trade with that as one of your rocks of your strategy. So definitely check that out. You can join Rocky Outcrop's Patreon, but you can get free access to the Discord on www.discord.gg, like good game, /Rocky Outcrop. So discord.gg/good game. So we've got this formation here where price action came back up, fell back down again, tested the previous low. You've got bullish divergence on a macro sense, but then it's a downtrend, and you've got continuation divergence all over the place. Plus, this is a horizontal level of support that's been tested a number of times without a distinct positive momentum signature, and then every move to the top side again, as we see continuation divergence, 200 period moving average rejection. So this is a tough formation. A lot of people would have been excited about this on the breakout, only to see it come back for a retest. That retest failed to break the prior high, and then put in continuation on the lows. So if it does fall into break this previous low here, I'd say you might be looking at some sort of displacement in price action. Deep retracements here. It would be a nightmare if it was to continue on down. If that was also confluent with the magic ruler moves, then 1618 would take you to low side of this formation basis line at the minute. That's very possible, but does speak to probable issues afterwards. 1.13, probably make that more accurate. And then you've obviously got your prior lows, but I don't think I need to make that too distinct. So yeah, that was your body closes here. So you've got a touch of the bullish divergence, and then you've got it, as overall between these two lows. So there is reason for it to have a reaction, but that reaction may be in terms of where would it go? Will it go in search of resistance? And maybe here you'd be looking at the daily 200 period moving average, which if it didn't even get to, so 4 hour, it got to it there, and it was a clear rejection. Subsequently, it's lost to 50. So this is like overall a downtrend with rejections within it, and it's very dangerous. Below the center line RSI, just currently seen a rejection, and sure, this is over. Like this is, you'd have to be kidding yourself to tell you that this was a bullish retest. This is a nightmare, and it's creating more and more brittle cracks and support. Down to the 1 hour time frame where 50 simple went through the 200 period moving average, price action continued with it. You got reversal divergence across the piece here, and you're putting in the perfect picture to roll over and find a move back down that loses about 30% to 50% in price action. If you get rejection from that 200 period moving average, that's a 40% move off, just to come down and catch up with the linear trend and support, which is what it would do. So really, really dodgy. Don't see massive opportunity right there. I can say that you've got loads of different signs of rejection. If it is to break up, the place to trade this is when it's making a breakout move, which could potentially be very, very strong. And that would be, if you're looking for it on a tiny, tiny time frame, something to happen right now, I'd be looking for this to break back above 2, hold that after moving through it, so a test of support. So I wouldn't be buying it as it breaks. I'd be buying it subsequent to that on a retest, and if it didn't retest it, I wouldn't be buying it, and then I'd be looking for it to trade it from 2 to 4, and that's nearly 100% move. That would be the trade I'd look for. There isn't a better trade on this thing. That's the place to buy it. Here at a retest, this is the place to sell it on the first pass, and anything beforehand that gives you consternation, you should definitely think to do it, because if you do come up here, you probably get rejected the first cast. If you do break through and go here without testing it again, then you don't have the risk profile to take that trade. If instead you go through, you fail at 786, you come back down, hold what would be the golden pocket, and probably has confluence with other fibs, plus it's the 382 looking left, then you'll break up and test a prior high, and you can see that you get 100% trade move on that with a significant probability that it works out if you manage your risk properly. So the risk is what's helping you take advantage of the opportunity. So overall, that's the best way to trade that, is between these two lines here. Bing bong, the price is wrong. That's FLJ. So Tyson Foods, TSN. Update. Who you buying, Tyson? Who you buying? Up in pre-market, 49.09. Closed down on Friday, 0.95%. Whoa, that was a surprising flash lines. But so turn off the drawings again. Nobody likes to touch at the best of times, especially not with my drawings. Right, so you can see as we've got so much price action on the screen here that previous lows are in at around 43. Body closes on that around 45. Was a flash, and previous level of support between 49 48 was the zone price action is in at the minute. And you can see that since 2015, Tyson Foods has had strong reactions from this horizontal level where it finds itself at the minute. That's by no means a guarantee that the same pattern will be repeating. I'm on a 2-day time frame. On the daily time frame, you can see again that horizontal level. I mean, it's not obviously defined with as frequent touches as, say, this diagonal uptrend, or perhaps what we're seeing across the top side here. If it is that, then it would be a broad information. This is the biggest chicken company in the world, and one of the largest food companies in the world, with various sectors, from not just chicken, cows, grain, and so on, but they're also fish, dairy, non-meat proteins, huge amounts of industry, huge. What's the market cap on this thing, for example? Yeah, so market cap 17 billion. 17 billion. Average volume 7 million. Volume there 5 million. Dividend yield 3.93%. Yes, well, 3.93%, approaching 4%. Current prices, share prices, we did predict that prices would drop down and that the dividend would become more and more attractive. That doesn't necessarily constitute a replacement for any reduction in your capital via the share price reducing, but we can rely on Tyson and their dividend. So a lot of people will be looking at it and managing it for that reason. If we're looking at this and thinking it is breaking to the top side, and the reason it's an opportunity for people who follow this channel, to anybody who's watching along, is because we identified in advance that they'd probably have really tough earnings because of what was going on with their peers, and how we can see the various levels of the economy that reach Tyson, and then how their particular business model exploits various industries and the pain that they're in at the minute. And so we were able to see that there was likely a bit of a dip after earnings. And we also know the current state of affairs is that cash is trash, right? With inflation, shareholder value in any of these short-term equities relies on positive earning results in the face of heavily discounted cash flows. So if your company isn't generating really good earnings, then if it's really actually generating bad earnings, because it's going to all of that erode your shareholder value. And if that's not done, seen directly in your pocket, or when you're at the shops, it's seen comparatively to other people's accounts who aren't experiencing these contractions in their overall portfolio. So entering Tyson in it below 50 was obviously way better than taking it up around 60, 62, where it was when we were saying, look, it's coming down. This subsequently gives us a gap to aim to the top side, and the potential for market reaction to the fact that it's a secure dividend and it was a dramatic price decline in a very tiny short period of time. So do we see a correction that takes this thing back up 5-10%, quite possibly. 50 simple period moving average at 50, and then 200 period moving averaging around 64. They're also very, very good at stock operating, Tyson, because the companies that these companies and their peers were born long before much of the industry that's used, much of the financial instruments that were used to navigate through seasonal price differences. And so these people are some of those who created the instruments we use today. They certainly have a heavy cultural influence on them. So it wasn't just, Don Tyson didn't just invent the chicken burger. No, siree. Right, so there's this gap, yeah, and as I say, that gap begins in at around 54. That's about 10% on price action at the minute, yeah? So can you justify a trade here? Well, not if it's in the process of breaking down, but this is very oversold in the 4-hour daily time frame. Typically, this would be where you see price action turn around when it does come in its low ebbs. Overall, you would say, you know, a lot less risky than it was up around $97 to $100. Having retraced 50% there of its value. Has there been a 50% reduction in Tyson's long-term value? You know, the 4-hour, we can see there is a flash in at around 39. Very cautious of that. If price action then does break below these important levels you're in here at the minute, the next level to aim to would be around 44, 45. The wick's in at around 42, and then that flash at 39. So a breakdown doesn't look fantastic for Tyson here, but looking left, you can see that typically these sharp moves to the downside, those that find the RSI oversold here on the 4-hour time frame, aren't met with positive reactions. We see this one here wasn't. This is one, but that was at the top of a trend, and at this instance here, you know, we can see that the equivalent level on the RSI wasn't a distinctly important low compared to, say, for example, here, because subsequent to this, we went on and put this high in, which was higher than the previous high. So we were in an uptrend, and this was a higher low. And then the same thing can be said previously. You come across here, and you can see, not even in the oversold, right? But you had 3 touches of bullish divergence. And if you look left here, no look right, sorry, now to where we are at the minute. No divergence in that sense, but looking left, you can see RSI really, really oversold. All gain here. That was a low head of a mood uptrend that took you from 44 to that $100 target. And then now again oversold. So, you know, he who dares wins and whatnot. You have, if you know, scaling it into position, maybe you're looking at this as I was describing it to people as potentially 2 different ways, right? There's that idea of short-term targets above, looking at the gap, thinking about capital appreciation and not really focusing on the dividend, other than the fact that it provides you with a little bit of capital appreciation and passive income in a way that will pick up and compensate for any reduction in your investment. So it's not necessarily the focus of the trade. If you're a short-term trader, you're not looking at the dividend. If you're a long-term trader and you are looking at the dividend, potentially you're also trying to scale into position. So these would all be entry areas all the way down to 39, and you'd be taking tiny chunks, adding to your portfolio, getting a bigger and bigger position as and when it got more and more attractive, and or watching it move to the top side as and when they go about buying people, which they're going to do, because these chicken stranglers love buying companies. They love it. Any brand that manages to capture any meat shelf space, Tyson are right all over it, right? A true loved American brand, we'll buy it. We'll buy 5 of them. Got any more? We'll buy some more of them. So that's Tyson. There are also other. Tyson gapped up this morning. Is it gapping up this morning? Let's get on the regulars. Up 1%, 49.39. During the 1 minute time frame, markets are open. Price action looking okay at the moment. It's hard to tell because I'm talking about it, but then again, it is a $17 billion company, so I'm sure it's not just you guys. A little bit of a gap. I see that it's held to 50 simple so far. If it goes back up without closing that gap and now exceeds 49.56, it will push higher. Targets to aim for there. Obviously, amazing flash targets if you're looking into extra hours. If you break this target, an ABR pushing all the way back up to 50 and plus 50 plus another little bit of a gap fill then in around 50.71. These sort of areas, and then subsequent to that, you know, you've got your peak in at around 53 and you're back talking about closing the bottom side of that gap towards 54. Can you say you close the bottom side of a gap? Get close to the bottom side of it, but not yet close the gap. That's what I would think is possible if you get a really positive day, which you could see with this thing failing to close the gap it opened with. But that's all predicated on the idea that it does do that. Of course, you would think that it would most likely and most commonly, these gaps would fill in the first opening range of the first day, and vast majority of them in the first 2 hours of the first day. So we'll see. Plus today's Monday, so there's a long week ahead of us. Right, so back to SPY. What did you do? Open, came down, closed your gap. That would have been me making a low money for the day. So it would have been great. Thanks very much for supporting today's show, Frank. It's appreciated. Thanks very much if you're new and appreciated the show. And please tune in again. It'd be great to see you and need more viewers to keep the show growing and get it sustainable, so that we have, people support what's going on here. And I'll do everything I can if you're new to support you and show you how valuable this show is, so that hopefully you grow into somebody who can help me change the world, and we'll do it together. So if that is you, stick around. And if you've been sticking around for a while, think about supporting the show. Thanks very much. Today was another excellent show, and last week was fantastic. But I'm putting in like 8 hours, 9 hours into these things, and they're not getting 8 or 9 hours watch time, so it takes me longer to make them than cumulatively everybody in the world spends watching them, which would be a negative ratio. So hopefully we can change that, so that we can keep going. Thanks.